Hello friends, thanks for joining me again. I hope you're all well. I follow a particular chart almost every day. Well, I follow a number of them every day, but this one in particular I've been following for more than a year, very closely. And I've used it a number of times in videos showing different principles that take place. Now this is a weekly chart, and if you've seen my video on weekly charts, you'll know that one, I really like looking at weekly charts. Takes a lot of the daily noise out of the market. And two, every weekly bar is made up of 5 daily bars, and that makes any principles that occur effectively 5 times more powerful. So if you can see a period of, say, bullish absorption like this, it'll be a 5 times more powerful indication than if you see it on a daily chart. Now, I have a video already on bullish absorption. You can go back and watch that if you want some more detail. This chart is taking place right now, and there are certain characteristics that you'll see to help you determine if you're seeing bullish absorption on a chart. It can be a little bit hard to identify initially. Those principles are a pressing nature towards the upside. You'll see clustering of closes really closely together, and that's the absorption taking place in the market. And you'll also see threatening down bars that appear that price is going to break down, but instead price doesn't break down and instead moves higher in response. And this is buyers coming from off screen or off market when they see a bit of weakness in the stock, and they come in to buy it up because they're waiting to buy it for a better price. These are the principles or characteristics that you'll see that form a period of bullish absorption, and it's generally quite a sign of strength for the future. Now, you may wonder why bullish absorption forms in the first place. If we have a look at, you'll generally find bullish absorption takes place for 2 reasons. One is in a period of accumulation, and the other is in a markup phase. In a normal period of accumulation, you'll effectively see price moving lower. Then there'll be some form of climactic action. Price will then move into a trading range for a period, and this is where absorption takes place. Then at some point in time, price will break out. It'll come back and test the highs of the trading range before accelerating higher. But what if there's no catalyst for a climactic action event? Like this might be a selling climax, for instance. If there's no catalyst, but there's people in the market or large groups in the market who still want to accumulate a stock, they really only have one option, and that is buy the offer. If they just buy, they will push price up against themselves really quickly, and that's not how they want to do it. They want to accumulate for a much lower price, or the lowest price possible, and then mark price up or allow price to trend higher. So a buy the offer period happens where you have the offer, which are the sellers in the market, and they're all selling at a certain level like this, and the accumulator chooses to buy up to a certain price level and then allows the market to drift lower. It may even sell a little bit of stock to encourage price to push lower like this, or short the stock but cover almost immediately. They're not shorting it to make a profit, they're shorting it to moderate the price movement and bring price back. Then you'll see price go sideways for a period, and another buy the offer occurs after the offer has been reloaded again. Price then drifts lower again. before price moves sideways, and another buy the offer period takes place. This is how the market is accumulated without pushing price too far against itself. But what if the market is really strong and at a certain point there are no more sellers or very few sellers at this level? No meaningful amount of shares can be bought anymore, and perhaps they're sitting up here now in the offer. There's no option but to push your price a little higher than the initial highs that you were pushing towards and buy the offer at a slightly higher level. Especially if there's other people in the market that are coming in, and whenever price moves lower like this, before you can buy, someone else has jumped in to buy. So there's competition in the market. Then the price moves higher like this, and each time it doesn't move quite as low as it did the previous time. And you can probably see what's happening already. You've got a period of bullish absorption forming like this. So effectively, it's a very strong accumulation. It's a period of accumulation that can no longer go sideways because of competition and buying pressure in the market. So price tends to start pressing higher like this. And you'll get those periods where price clusters together as the market is absorbing the stock that's drawn out as price moves higher. And you'll also see threatening down bars that never seem to have downside follow through. Instead, the market pushes higher in response almost immediately. Now, during a markup phase, you'll generally have a period of accumulation take place, and at some point price will break out, and then there's a period of consolidation in response, and then price will break out a second time, and there'll be another period of consolidation in response. And this period of consolidation takes place because whenever price moves higher, particularly over a very short period of time, it'll draw out supply. It'll draw out profit takers. It'll draw out supply from the left that may have been trapped in a losing position, and those people can now get out for break even. And it'll also see some short positions being opened, thinking that price has to come back, it's gone too high. So you'll get these surges higher like this, and then at a certain point supply will start coming in, and there'll be a period of consolidation in response. And you'll often see this when there's active professionals in the market pushing price higher with some sort of vigor like this, and then a period of consolidation, and then another breakout bar. And this is common in stocks where active traders are involved. But if there's not a lot of active traders and mainly passive professionals, they're professionals who aren't necessarily supporting their stock. They buy a position, they will hold that position and allow the market to eventually push it higher because the fundamentals continue to improve. When that happens, there's no one to give the market this push higher. So what happens is, as the fundamentals improve, you'll see price moving slightly higher. You may have like test for supply, a little drift lower, a push higher because the fundamentals continue to be strong, some testing for supply, and so on. You'll see price trending higher like this. It's like a buy the dips mentality. Whenever weakness emerges like this, there's people waiting off market to come in and buy. And this is how bullish absorption forms when price is trending higher. It's not necessarily part of an accumulation. It may be a combination of both, or this period here of accumulation just continues to develop into a trend where price just continues to trend higher. Other times you'll see it halfway through a trend where market may have been moving higher, and then all of a sudden it just starts to trend in a straight trend. There's no real up and down motion, or what does occur is muted. You've got this period where price just presses higher continuously. Fundamentals have improved, there's buying coming from off screen, and the pressing nature to the upside takes the precedence, along with the clustering of closes and threatening down bars that don't see any downside follow through. This is during a markup period or a markup phase. It's not as clear cut as you might see with active traders involved, but when you do see it, especially on a weekly chart, it's a fairly strong indication of underlying positive sentiment in the market. You can see this occurring right now. Price is pressing higher. There's a period of accumulation in the background, especially on these two bars. There was strong buying, and this is your sideways absorption period. Price started to move higher. There was an acceleration, and once that happened, there was no stopping it. There was enough buyers waiting off screen that whenever any weakness emerged, the market is being bought. You see, price came back here and immediately price went higher. It pushed back, it didn't reach the low of the previous bar, but immediately the market moved in and bought it higher. You can see here there was a little period of, there was probably an attempt to test in the bottom half of this bar, but the market was so strong it ended up pushing higher. A little bit of profit taking may have occurred in this bar, or the market was encouraged to move lower. That was this part of the bar. And you can see there's like a shakeout in the bottom half, and then the market has bought it back again really strongly. Mostly testing in this bar, a down bar that's been bought up almost immediately. Now this bar is this week. It's got 1 day more to go. This is Thursday. Friday's trading is occurring right now, and the market is up in this stock. And this was a shakeout, an opportunistic shakeout. For various reasons, there was an opportunity for the professionals in the market to shake out, push price lower with some sort of vigour, and they took that opportunity with big smiles on their face. The opportunity was taken to ram price lower and then buy price back, and today it's higher again, and probably about this level at the moment. It's only an hour after trade started, hour and a bit. So this was an opportunistic shakeout, and if it proves successful and price does continue higher in response, and there's a pretty good chance that it will, then this will just be another sign of strength for the market. A successful shakeout is a positive sign of strength, and I think this is really just an opportunistic shakeout. It was a good way to shake out some stock and get rid of some people who may be sellers in the future. So when you've got potential sellers on board, it just means more stock that needs to be absorbed to push prices higher. So if they can be shaken out, then they're not there and price moves higher with more ease. So I hope that was worthwhile. I hope you can see what I'm saying about the bullish absorption. The three characteristics that you want to see are a pressing nature to the upside, a clustering of closes, which is the absorption taking place, and threatening down bars that don't see any downside follow through. Okay, thanks for your time again. Hope that was worthwhile. See ya.